So, hello. Hope everybody's having a great day. Here we go for another one of these updates. Going to discuss the SPX framework, no trade cost recommendations, or responsible loan stuff. Here we had a little bit of a bounce after the ceasefire announcement. I'm not going to go through the merits of the deal, if it's going to hold, if it's not going to hold. I'm just going to focus on the technicals here. No political discussion, but basically what we're seeing here is that all in all, the market is still in potentially respecting the downside pattern for a move back into 6150. But here, it's a key inflection points for the bears. They absolutely have to defend this level. Now, broadly speaking, unless the let's say when you see these kind of gaps, unless they're on something substantial that really changes things, usually they get filled, right? So base case expectation is not that they have to fill straight away or a specific period of time, but that ultimately, unless it's a real game changer, something something that really changes positioning, allocations, etc., across the board, it'll tend to get filled. So here, what that means is that we have that famous kind of scene of the crime scenario, right? Where that's the scene of the crime, meaning that's where we closed before we got the headline. So now, if the if the ceasefire falls through, if for some reason the negotiations don't happen Thursday, Friday, don't be surprised to see us right back into that level in a heartbeat. Now, would that mean that bigger picture, everything changes, it's the end of the world? Absolutely not. It just means that the market is repairing a move it made on a headline, assuming something was going to happen. And if that doesn't happen, it comes right back into where it was before the headline hit. So ultimately, you shouldn't read too much into that. You should always default to the basic framework, or that's the way we would be working. So right now, you've got a situation where bulls panic bought the gap up, and again, most people are probably going to be trading with a stop below those lows, saying that's in, the deal is in. We're never going to trade back below the 10-day moving average. We're never going to trade back into these lows in our lifetime. Sky's the limit, and we're going higher. And what you probably have is bears that had been covering into this bottom end of the channel, looking to add back on a pop, adding back at this technical references, which is the tweet range high, number one. Number two, the confluence of the channel low. Number three, you've got the 2026 open, adding as additional resistance further above. And then number four, you have the confluence of the two moving averages, the 100-day and the 50-day. Now, how would we suggest you frame the scenarios here? Now, if the bears can't hold this from a closing basis and we start to see the market getting comfortable above that range high, above all this confluence zone, then it likely means that, also the news flow accompanying the bulls, everything's getting better. And then there's a very high probability that we're going to see the market try and test those all-time highs, test that 7,000 level. Keep in mind that from where we closed yesterday, that 7,000 is, not 3%, just over 3% away. So that could be done in a heartbeat. It's not a crazy ask to see us trade above that. But basically, the way I would read this is that above yesterday's close, there is a potential air pocket all the way back into all-time highs. Then all-time highs is going to be a pivotal bull bear line. This area is, kind of air pocket, nothing much to read inside this zone, but I would say neutral to bullish. And if we get a move back down to fill that gap back inside the tweet day range, then I would also read this whole area, call it 6,800 into the 6,550 as a neutral to bearish air pocket zone where we don't have an awful lot of clarity. Where we have a likely we get a lot of follow through, or much clearer follow through, is above 7,000 is clearly you're looking for upside. It's acceleration for all those upside targets we've discussed. And back below the 10-day moving average, back below the Trump tweet range, then we'd be looking for an aggressive move back into those lows and ultimately back into those 6150s we discussed. So I would say here, just be cautious inside this area. If you want to look at it in terms of, broader area, say this is still a very neutral zone, because don't forget that essentially since we popped back there in October, we've been kind of stuck in this area. And unless there's something very concrete, it's really, you don't want to read too much into it. Again, all neutral, of course, with a little bit of a bullish bias on the upside here and a little bit of a bearish bias below, but it's still a fairly neutral zone. Again, let price guide. I think it's also useful to do these updates for you guys with the SPX, because we're only looking at the cash session, and it just helps people step back a little bit and get a little bit of a clearer picture. So hope that was useful. Wishing everybody an awesome day ahead. All the best. Take care. Bye-bye.